Hi everyone, this is Terrence Tan, the Impossible Investors. What I want to do is to bring to all of you the attention of what the market is doing. January has been a difficult month for most investors. If you're bullish over here, yes, you'll be trend riding, but at the same time, you may have been caught out on Monday with all your stop losses, and then only to feel very antagonized over here when the market rebounded over the last 2 days. So what's in store over here? Let me cover it in this video in my market update and how you can plan your trades moving forward and some things that you must know before you place your next trades in the markets. Alright, so January has been a difficult month. I would say a difficult month because you have to be very careful and very selective with the trades that you're doing. So being risk-averse investors and portfolio planners over here in our community, we have picked up some trades, though it's much harder to look for them than normal months that we would like, but there are still good trades out there that we've been picking up. So right now, what's going to move forward next? All right, because market has fallen 50 points on Monday, another, if I'm not wrong, 30 points on last Friday over here. So market has suffered a little bit of a crack right now. Are we going to see a full rebound like the last 2 times it's happened, or is this the beginning of the end over here? So that's a topic that a lot of people would like to know answers about. So I'm going to just touch some pointers that I've realized in the markets right now amidst the earnings seasons that is ongoing with my analysis today. So let's get to the screens over here. All right. Okay, now to the market updates. What must you know going into the market session on Thursday night over here in Singapore for the US markets over here? Now, as of yesterday's close, the S&P had a pretty much volatile night. It may seem like it didn't do much, closing just down by about 2 points over here, but it was a pretty volatile night because it opened up about 11 points and then only to fall back to about 7 points, and then only rebounding after that back towards 7 points up and closing the day down over here. Alright, and it includes a lot of earnings announcements throughout the day, as well as the Fed announcement over here as well. Alright, now, so what is in store over here? So as you see the headlines, S&P slips as the virus fear persists. Federal Reserve stands pat on their rate. So Federal Reserve basically did nothing over here. Alright, now, so what's actually gonna happen from here? That's the most important thing for all of you to know. Now, from a technical standpoint, what we may have seen over here is in the beginning of 2020, we actually saw a little bit of what we call a divergence over here on the RSI. So we had a higher high with a small divergence, and now we're seeing the little bit of a sell-off in the markets over here from the oversold conditions as well. Now, but the main thing over here is on Monday's dip, or we would say a quick correction move over here, it actually broke off from the 20-day moving average that has been holding the market up over here. So now the question is, it did it once, it did it twice over here, but market quickly recovered back above the 20 moving average. Is it going to do it a third time? All right, now, so that's a question that remains in many people's mind over here, or is this going to be the beginning of the end? All right, so these are questions that I'd like to touch a little bit on during this session of the video and bring to your attention. Now, so market has cracked a little bit. So what we need to pay attention right now is the 3,300 whole number level resistance, because that was the previous support that was broken over here on Friday and followed through over here after that on the Monday. All right, so now markets are rebounding, so we can probably expect it to rebound closer towards the 3,300 level. But what's really important right now is what is it going to do from there? All right, so as we see yesterday, market recovered. It hit the 20-day moving average, and then it kind of weakened off after that as well. So is market going to turn around from here, or is it going to stretch a little bit towards 3,300 before doing that? Nobody knows. It may even clearly crack back above 3,300 and resume the bullish trend. Right, but on the downside over here, what's going to be really interesting is to pay attention to the 50-day moving average support right now, which is sitting around $3,200 points level, as well as the support at the next whole number level for the S&P 500. Now, so if markets do come down and it does crack below 3,200 levels, we may actually start to see a lot more selling take place in the market over here. How bad could it get? It could actually bring us all the way back close to the 3,000 point level on the index, which is where the 200-day moving average is sitting right now. All right, so we have a very strong pull away from the 200-day moving average since October, where it came close to it. So is this going to be ripe for this move? And if the move does happen, we are actually going to see a 10% drop over here in this correction move. So that's going to be a pretty substantial one before any up move can be resumed. Now, what's really catching my attention over here is not just the market and what it's about to do, but it's what's happening over the last week as the market corrects from the highs, and what we're seeing with the interest rates and the bonds over here. Now, few may have paid attention to this, but when Friday market kind of did its first sell-off over here, what we have seen in the 10-year Treasury yield on the opposite end was a quick dip in the interest rates over here. Sort of a gap down, and the last time it happened over here was sometime back in August. And if you look closely over here, back in August was where we also had the last sell-off in the markets, just that it bounced around sideways a little bit and it was not sustainable because the rates resumed back upwards after that. All right, but assuming that it's going to come off again this time, what it's going to bring about over here is it's going to bring about the whole yield curve inversion story that was being played out sometime in August last year as well. All right, what's so important about this yield curve inversion? It just means that, hey, markets may seem to be doing well, markets are hitting a new high, but the weird thing is the yield curve inversion points towards a recession status in the entire economy itself. So this may throw some wind in the caution and spook some of the professional traders out there in terms of the positions that they'll take. Right now, so going into effect over here on the 20-year Treasury bond ETF prices, all right, we actually see the bond prices actually did a gap up over here and then staying strong on top of that. And in fact, yesterday was another surge up over here. So we may actually start to see the TLT ETF prices start resuming back towards the 146 and then the 148 level, which is again the last time seen in the month of August, September, in the last correction move that we see in the markets. So is this going to be more severe? Is it going to be something that is playing out in the markets? Well, at the moment, I'm not sure because it's not happened yet. So nobody knows what the markets really want to do right now. But right now, what we're going to see is we're definitely going to see a lot more volatility in the markets being played out. We may start to see actually the S&P chop around 3,200 to 3,300 levels for a while before the next breakout happens in the market, and then it tells us where's the next move going to be. But as of right now, there are signs of caution to be taken over here. So if you're investing, you're going with the trend and you're still bullish in nature, make sure you do your trades over here with very, very clear cut loss or stop loss levels. Or if you're part of our communities over here, do make sure that you keep your risk in check, your exposures in check over here, and moves to be making. All right, stay cautious, be selective with your trades, make sure you have ample support levels to protect you from, or make sure you have a lot of leeway before losses are going to start happening on the trades that you take, and make sure your losses in any trades that you have taken right now are definitely controlled. All right, that's something that you must be doing right now. So for those of you who are owning a portfolio of stocks right now, so you may want to start taking some hedges or controlling losses if the market starts selling off from the highs over here. All right, so many of your stocks may be profiting right now, so you may want to think about what you want to do with them if the markets does start making a turn from here. Now, main thing right now, a lot of people are keeping a lot of cash. These cash may be going back into the markets, nobody knows. But for us at Impossible Investors, I'm Impossible Investors. Now, what we do over here is we keep our funds out of risk. That's how we use things. So we do not keep cash, but we make sure that we have funds that are out of risk so that we can capitalize on opportunities when the sell-off does happen. All right, because we can utilize these funds. They are actually currently being used as well, but they're not being risked. So Thank you very much for watching this video. If you like what I'm sharing over here and want to know the next updates, do click on the subscribe button that you see below this video over here, so that you'll be able to get updates when I post the next what you must know before you trade in the markets over here. All right. Meanwhile, stay I'm Possible over here. In I'm Possible Makers, we make things happen, and we wish you all the best for your portfolio over here going into the end of the weeks. So a lot more earnings are coming out over here, so stay safe with your trades and happy trading.